Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thanks to those who subscribe to the channel. I really do appreciate it, and the channel continues to grow because of people like you. We are closing in on 1,000 subscribers. This video today is going to be a portfolio update. We do these every Sunday morning at 7:30. So for those of you out there who may be dividend growth investors, that's what we focus on this channel, dividend paying stocks. Dividend stocks in general, dividend growth investing. So if you are into that kind of content, go ahead and hit that subscribe button down below. Hit the notification bell so you're notified whenever we post any new content. Join us on this journey to financial freedom. Join the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences, updates like this, what we're buying, what we're selling. If you do options, I do cover any options that I do on a weekly basis as well. Covered calls and cash secured puts are what I'm selling for options in this portfolio. Let's take a look. We did add $1,487 and some change to the portfolio, and we will start out just like we do every Sunday morning with the options. So let's jump right in. So we are doing the wheel right now, a wheel option. If you don't know what the wheel option is, I have done a video on it. Go ahead and look at the past videos here. I'll try to put it down in the comment section below if you wanted to link to it. So look down below if you want to know what the wheel strategy is. But basically it is picking a position or a stock and doing a cash secured put. And then if you're assigned the shares, running a covered call on those, and then basically rinse and repeat back to a cash secured put, back to a covered call once you're assigned, over and over and over again until it hits the price you want, or you want to keep it in your portfolio or whatever you're doing. So I'm running it on positions that I want to add to my portfolio, NextEra Energy being one. I was doing Williams and Sonoma a couple months back. So I've done it on positions I want to add ultimately to the portfolio. Right now, NextEra Energy is way down, so it just made sense to do it here. So I ran two, right? That's the number there. Two covered calls. I was running a cash secured put. I was assigned the 200 shares here last week. So now I'm running a covered call on it. I ran a covered call on NextEra Energy here, a $70.50 strike price with an expiration date of August 11th, which was Friday. So I ran it on Monday and to expire on Friday. So I'm running them weekly. And it did expire out of the money, right? It didn't run up past 70.50, so I kept the $88.92 in premium, right? So $88.92 added in option premium. I still own the 200 shares, so what I will do is on Monday run the covered call again on these two. And I may only do it on one. I do want to keep about 100 of the shares in the portfolio. Really, I want about 160 shares total. So you will see that in the video today as well. I was not counting these 200 shares as part of the portfolio. I was just counting the 10 shares I was adding weekly, but I am counting 100 shares out of this. So I probably will run this one more week or maybe two. I think that NextEra Energy is set to have a dividend expiration date coming up here. So once that passes, I may look to just sell 100 shares, keep 100 of this covered call, and then run a covered call on another position that I want to add to the portfolio. But right now, I am running these covered calls on NextEra Energy. I will do the same thing on Monday again. $88.92 total added this week in options premium, and I did add this to the options premium from last week and sync that into the portfolio. This is part of the $1,400 that I added this week. No dividends paid out this week. No company, just one of those weeks where we didn't get any payouts. There aren't a lot of them in the portfolio, but there are some sporadically throughout the year where I do not get any dividends. So nothing to report here on the dividend front. And first day of activity, we added on August 7th, $137.45. And this is basically the options premium from last week and the options premium from the $88 that we just saw from this week as well. And with those shares, I used it to buy 2 more shares of NextEra Energy. So I'm using the options to even increase the positions that I'm running the wheel on. So 2 shares of NextEra Energy. This is out of the utility sector. We bought those shares at $68.73, adding $3.74 in passive income over the next year. And then we weren't done. August 10th was the majority of the funds we invested. This is all new capital. August 10th, we added 11 shares of Sabani Stillwater, ticker SBSW. This one has really pulled back, and I am enjoying, even though I am down significantly on this position, I am enjoying bringing my cost basis down and my potential future returns up. We added 11 shares, ticker SBSW. This is out of the materials sector. We picked up those shares at $6.88. Valet is another one out of the materials sector, ticker VALE. We added 13 more shares at $13.64. Both of these have really pulled back below my cost basis, so I'm comfortable adding it. NextEra Energy, the one that we are running the wheel on, like I said, I want to build this out to about 160, 170 shares, so I am adding, even though I have 200 shares that have been assigned because of that cash secured put from last week. I'm continuing to add shares because, like I said, I will eventually sell those, at least 100 shares of those, and run a wheel on something else. But for now, I'm continuing to add, so I added 10 more shares of NextEra Energy, ticker NEE, at $68.86. And I really like it down here, right up against its 52-week low right now. Nice pullback on this one, so I'm going to continue to add it. Like I said, probably run it up to about 170 shares and then back off a little bit. Realty Income, another one that I like that's pulled back significantly below my cost basis here. 2 shares of ticker O. This is a REIT out of the real estate sector. Picked up those shares at $58.80, and I like this anytime it is under 59 here. I wouldn't even mind if it pulled back further, but for right now, I'll buy it anytime it's under $59 per share. And yes, I know this one's going to be controversial. I added 12 more shares to AT&T, ticker T, at $14.29. I know this is a terrible company, a terrible stock. There's no growth. It's just a waste of my money. I know all the reasons not to buy it. I just don't see it that way. I see value here at these prices, so I'm going to continue to add to this one, as well as Verizon. Very high yield on this one, even if there is no growth in this company, which there is a little bit of growth. They recently did decrease their dividend, so I think the dividend is safe. And if you look at the payout ratios, they're under 70%. So I'm fine with it there, and I am buying and adding to this one as an income play. Another one that is below my cost basis significantly, so I'm going to continue to decrease my cost basis, increase my yield on this one. It is really an income play, so even if I get slow growth to no growth, I'm fine with it because it is paying above a 6-7% dividend yield. I don't mind no growth on a company that's paying 7% yield. I'm fine with that. Medical Properties Trust, another one that has pulled back recently, back below my cost basis. This one I'm building back out as well. You're going to see that I may bring in some funds early on this one and run a cash secured put on this one as well to add another 100 shares to this position. But this week I added 14 more shares of MPW. This is another one REIT out of the real estate sector. We picked up those shares at $8.50, and I believe it even settled out the week a little lower than this, $8.15, $8.16, something like that. It's even lower now. I would love it to drop back into the $7 range and continue to add, but it's below my cost basis, so we added a little bit more. All total here, this $1,349.61 added an additional $69.12. Total invested, $1,487.06. And total passive income added this week, $72.86. That's just $69 here and the 2 other shares of NextEra Energy that we saw on the previous slide. Now let's run through the sector breakdowns here. You're going to see a bit of a change because we did add in 100 shares to the NextEra Energy. We basically took half of the covered call that we've been running. We added that in. I am going to leave at least 100 shares out of that covered call that I'm running into the portfolio, so I'm adding it now, not the full 200, but just 100 shares. And communications is sitting at 8.23%. Consumer discretionary still the smallest slice. Really looking for more of a pullback here. Really should have probably loaded up on Williams and Sonoma whenever it was down in the 110, 111 range. But that happens sometimes. You never know if it's going to jump way up, and it did. It ran up into the 130s, I believe it's sitting at now. So waiting for a pullback there to add. As if it drops back into the 120s, I'll probably start adding to it again. But for now, I've just got the 2 shares from when I was running the wheel on that one and bought those shares. Excuse me. Consumer staples sitting at 5.44%. Energy is sitting at 6.41%. Financials, 10.95%. Healthcare makes up the biggest slice of the pie here at 18.61%. Industrial sitting at 8.49. Technology, 8.59. Materials is sitting at 14.98. It's the second largest piece of the pie here. Utilities, there's the big jump up we saw from NextEra Energy. That's the NextEra Energy position now makes up 5.46% of the portfolio. REITs and real estate makes up the third largest at 12.67%, and no ETFs. I really count this as my own ETF, though there are some ETFs out there that I like that I may look to get into in the future once I really build out my individual positions. But for now, I'm focused on more individual stocks. Over here on the weight is the portfolio sector weights broken down just a little bit differently. You can see the same percentages here in the piece of pie, but broken up as well as the monetary value of each position as well. So how much funds I have into each position. Now we will take a look at the total portfolio update, what you may all like to see from week to week. I do share this every week, so I'm out in the open with exactly how many shares I own of every company. So you can see here the ticker, that's the company's ticker right there. How many shares of each company I own, the current price as of the close of business on Friday, the market value, which is just the total shares times the current price there, my average share cost, which is just the total shares times my cost basis equals my purchase price, right? So this is my cost basis per share. Whether I'm up or down, if I'm in the red, it means I'm in the negative, and how much I'm in the negative by percent right here in the next column. What sector the company falls in, whether they're a quarterly, monthly, or semi-annual payer, what their current yield is. These numbers are all of as of the close of business on Friday. My yield on cost, the portfolio weighting. So in the previous slide, you got to see the sector weightings. On this one, you get to see each individual holdings weighting. Estimated annual income based on their most recent dividend payout. Which months they pay out, their dividend growth over the last year, and where they sit at 15% of their 52-week low. And I use this as kind of a gauge to tell me whether or not I want to continue to add to a company. If it's below my cost basis, I'm willing to add to it, or if it's within 15% of its 52-week low, I'm willing to add to it. So let's look at that for a minute. Like CVS, for example, if you were to look at CVS, you'd see that 15% of its 52-week low is $76.29. So even though my cost basis on CVS is $70.72, and it currently sits above that cost basis, it is still below 15% of its 52-week low. So if I wanted to add a little bit more to CVS, I would do that up to this $76.29. Quick run through the totals. Total shares sitting at 4,000. Total shares sitting in the CVS is up here. Sorry, I didn't have that on. I thought I did. Total shares sitting at 4,605.498. This is actually not correct because I'm only counting, if you look at NextEra Energy, I'm only counting 132 shares. I actually own 232 shares, but eventually I'm going to let 100 shares get called away whenever it does get called away. I'll keep running that wheel, and eventually I'll let at least 100 shares drop off. So technically I do have about 173,000 in the portfolio because I do own 232 shares in NextEra Energy, but I'm only counting the 100 shares that I plan on keeping in the portfolio. So that is the discrepancy here between my actual holdings and what you're seeing on the screen here. I actually hold more NextEra Energy than I'm showing. So market value without the extra 100 shares of NextEra Energy sitting at $166,656.92. I have $164,488.25 into the portfolio, so I am up $2,168.66, up 1.32% return. Current yield 4.699%. My yield on cost sitting at 4.661%. And this estimated annual income, this is what it's all about. The dividends paid out from the positions in the portfolio on an annual basis sitting at $7,831.26. And this is what I really focus on week to week. This grows whether the market's up, whether the market's down. As I add to my shares with new capital, as the shares within the portfolio increase their dividend, right? As they increase their dividends from year to year, that adds to the snowball. As they pay out dividends and the dividends go back in and buy more shares of the companies because I have the drip set on, that adds to the snowball. So that snowball continues to grow in several ways, bigger and bigger, larger and larger every week. If you follow along, you'll see this grow every week. So long as I don't sell out of the positions within the portfolio and they continue to be good companies that are raising their dividends, raising revenue, decreasing their debt, meeting the criteria that I have set up early on, this number will continue to grow on an annual basis. And right now, it is growing at an 8.09% year over year. And that's if I don't do anything. That's just, if I was to stop adding these positions, it would continue to grow at this 8.09%. Or as these companies change their increases, I'll adjust this, but right now it's 8.09%. Well, that is really it for this week. Let me know what dividends were paid out in your portfolio this week, if any. Do you run options? What options are you running currently? How is that going for you? As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors. Like I said, so we can share our experiences, stocks we're watching, stocks we're avoiding, tips and tricks that we've learned along the way. We're all at different levels at our investing journey, and we can all learn from each other's experiences. You can't benefit from my investing, but you can definitely benefit from my experiences, both positive and negative. They're not all positive experiences. We're all going to make mistakes. Even the best investors make mistakes. So don't let that be a deterrent to you investing. You are going to make mistakes. I'm going to make mistakes. I've made mistakes in the past. They happen. Learn the lesson that you're supposed to learn and continue on your journey. Well, that is it for this one. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel by a certified financial advisor.